Welcome to Keep What You Earn, where entrepreneurs of all levels learn how to navigate the financial side of entrepreneurship so they can keep what they earn and grow their business with confidence. My name is Shannon Weinstein. I'm a CPA, coach, and business mentor, here to simplify the money side of business for you so you can build your wealth and create the life you desire. Each week, I'll bring you guest interviews and solo episodes to help you unlock growth in your business through both strategy and mindset. I hope this episode inspires you to take action, but remember that the information contained in this episode is intended for educational purposes only and is not individual tax advice. Please seek the assistance of a qualified accounting or tax professional to implement anything you may learn in today's episode. All right, let's dive in. All right, so you may have heard about this cool tax savings trick where you can pay your children in your business and get tax-free money. And if you've heard about that, I'm happy to report that that is 100% true. And it's a legit strategy. A lot of folks question this strategy, wonder if it's shady, schemy. They like to question it because, unfortunately, we have been conditioned as a society to believe that something is too good to be true. if it's going to benefit us. And there's always a what's the catch, or that can't be right, that can't be real. And it really is. You just have to do it the right way. So it's not as simple as you cut your kids a check and you get to hide that money from Uncle Sam. No, it's not that simple. I wish it was, but it's not. So we're going to walk you through in this episode how to hire your kids to generate tax-free wealth for you and for them. So you may have heard about this $12,000 figure. So if you Google, for example, how to hire your kids, right? If you've done this before and you're like, wait a second, I can hire my kids. How do I do that? And you hop on Google, you're going to see this number floating around $12,000. Why is that the number? Well, it's because each year the IRS has what's called a standard deduction. It is your head start as a taxpayer in paying your taxes. So what happens is you pay taxes on your taxable income. And what the IRS does is they give you a little gimme. They give you a shortcut, a head start. They chop $12,000 off the top right away. Right away, your first $12,000 of income is not taxable. So they just let you earn that tax-free. Why does that matter? Because that's what you're going to be paying your kids. And that's how it works, is that they would not have to pay any taxes on that income because it's below their standard deduction, because it also applies to the kids. So in 2022, the standard deduction is $12,550. It's not always $12,000 exactly. It changes every single year. The IRS will reset the standard deduction. So what you want to do, no matter when you're listening to this episode, is check what the standard deduction is for the year that you're in. This is easily Googleable. So just check what the standard deduction is for your year. Right now in 2022, we are at $12,550 for single taxpayers. And if you are married filing jointly, double it. So that would be $25,100 for a married filing jointly couple. Now, remember, your kid is a single taxpayer. So that's why the $12,000 is the focus of today's conversation. So we're talking about eliminating all of that income by paying your kid and having them not have to pay taxes on it. It's pretty simple in concept. So why would you want to do this? Because you get to transfer wealth to your kids tax-free. You don't have to pay taxes on it because it's an expense for you to pay them out of the business. And then also they don't have to claim, well, they claim the income, but they don't have to pay taxes on that income because they're below the standard deduction. So they would have zero taxable income and not have to pay. There you go, plain and simple. But here's another reason why this is such a great idea, and I think more people should do it. Because this actually teaches your kids about money, wealth, a job scenario, making their own money, having taxes taken out of it, and everything that comes along with having a job. So depending on the age of the kid that you're talking about, this could be a really cool life lesson for them. So if they've been working for you since they were a young kid, that's going to instill a little bit of work ethic. That's also going to help them understand what you do. It might actually bring you guys closer together. Now, also, what I love about this is the education element. It also exposes them to the currency of money. It exposes them to getting paid and what that means and spending their own money, saving their own money, and letting them play with it a little bit. And if you've listened to our prior episode with Andrew about coaching young kids, that's something that I'm hugely passionate about, is really opening up kids' eyes into money concepts much earlier than we are right now, and doing it in school, doing it as parents, and being able to share that with our kids. So that is a huge reason why I'm a proponent of this strategy. So aside from all the benefits that come along with it, how does it actually work? How do we actually implement it, Shan? Okay, so first things first. The ideal age to take advantage of this strategy is around 7 to 17 years old. The child must be under 18 to take advantage of this. If your child's under 7, the Social Security Administration will require more support for the type of work performed, because they will need to understand how you can hire a less than 7-year-old to do certain things in your business. Now, it's possible. It's 100% possible. I actually work with a client who makes baby clothes, and her kids are models and they're toddlers. And it actually makes sense. Like, she pays them to model the clothing and sit there through photo shoots and stuff. I mean, we get paid to do that as adults. Why can't the kids? So that's a possibility. I mean, she makes baby clothes and her kids are all over her Instagram and her website. It's very obvious that they spent hours doing that. Now, can you get away with paying your kids just for appearing in your social? No, not really. That's not really legitimate work. So the work has to be legitimate, and the work has to be fairly compensated, and the kid has to be of age for the work that they're doing. So basically the story has to line up. That's what it all comes down to. So hiring your toddler to drive deliveries to customers is probably not going to hold up, but hiring maybe your 8-year-old to file paperwork alphabetically in your office, or hiring your 16 or 17-year-old teenager to respond to DMs on your social media does make sense. These are within the skill sets of, of what their age level could do for your business. So you also have to factor in other income sources of the child. So if you are paying the child $12,000 during the course of the year, for example, and they also have a part-time job, maybe they're 14, 15, 16, 17 years old, and like I did, work at McDonald's, or they work in, a grocery store or retail, or they babysit or whatever, right? If they're also making money aside from that job, that has to be factored into the total 12,000. So I'm not saying that you have to pay them $12,000. I'm saying that that's the maximum. You do not have to maximize this. You could pay them $100 a month at 1,200. You could pay them 2, 3, 400, 500, right? You don't have to pay them 1,000 a month for all 12 months. You don't. But you do have to consider how much income they're earning over the course of the year, and make sure that you're still able to take advantage of this strategy. So let's talk about who can take advantage of this strategy. What types of businesses can do this? So you might be thinking, okay, I'm a sole proprietor. Can I do this? Or I'm an S Corp. Can I do this? So here's the rundown of how it has to work. This is when you want to start writing this down, because this is where it gets very specific about how to implement. So the child must be directly paid from a sole proprietorship or an LLC owned by one or both of the parents. Don't bail on me, S Corp owners. Listen, we've got something for you too. Listen up on how you're going to be able to do this too. So how do S Corp owners get around this? The S Corp can hire a family office company, which can be a sole proprietorship or an LLC, that you can establish for your family, and then have the family office company hire the child onto payroll. So the child is going to be hired onto payroll, which does come at a cost, by the way. So when we talk about implementing this, we're talking about, nothing is super free. You have to also pay for payroll services to be able to execute this, but that will come at a fee of between 30 and $50 a month to be able to pay the kid tax-free, depending on what type of service that you offer or what type of service that you purchase. So just make sure that it is cost effective for you, the way that you'll be saving taxes on this. And if you already have payroll for your employees, then it's no extra marginal cost except the cost of adding an employee to payroll. Okay, so you mentioned the S Corp, Shannon. Why can't I pay them directly from the S Corp? because then you'd be required to pay the 15.3% payroll taxes on the income, and that makes it less effective as a tax strategy. So there is a rule around them getting paid by a sole proprietorship at LLC owned by the parents. That is one of the rules. So if you are currently operating a sole proprietorship or a single member LLC or a multi-member LLC, just the parents, you can pay them. But what you'll have to do if you're an S corp is establish that family office and make sure that you are paying a sole proprietorship or LLC some type of consultation fee, right? So you're just going to pay them as a vendor. So if I'm the S corp, I'm paying Shannon Weinstein, you know, or Weinstein Household LLC. Financial Solutions is paying Weinstein Household a fee, and then Weinstein Household is hiring my child, into their payroll. And then that's how they'll end up getting paid.
If you have an accountant who does your taxes, but you only see them once a year, I guarantee that you're not maximizing your tax savings. What you're actually doing is paying someone to do a report of how your money spent the year and talking about what happened in the past. Well, tax strategy is all about thinking about the future. You deserve a partner who can help you be proactive with lowering your tax bill and not just reactive. At Financial Solutions, we believe that tax services should be transformational, not transactional. That's why we offer tax strategy services that include a complete tax plan, meetings with me and our team, and year-round email and text message support to make sure you're always optimizing your taxes based on your goals. Book a consult with us using the link in the show notes and find out how you can save thousands right now.
So how does this actually save us money in taxes? Okay, so it's a little bit of math, but you can figure out that this money turns out to be tax-free. So if you have, let's say your 15-year-old daughter works for you doing some basic bookkeeping or helping you navigate your TikTok account, let's say you give her enough work to pay, $20 an hour for 10 hours a week, which equates to roughly 800 to 1,000 a month. But let's call it 1,000 a month with a couple extra hours in there. So that means $12,000 a year. So it actually is pretty easy to get to that total if you can find work that is marketable. So if you're having someone help you with their social, or you're having your kids help you with something that happens on a daily basis or frequently during the week, or they're spending a significant amount of time helping you, then this can be pretty lucrative in terms of being able to shift a lot of that income over to the kids. So if you stop at that, then your daughter's been making $12,000 in income, assuming she makes no other income, and therefore the standard deduction would wipe out all of this taxable income. Your business would be able to claim an expense, bringing your profit down, and then she would be able to basically keep that money tax-free because it falls under the standard deduction. And also, the reason why this is tax-free is that per the IRS, payments made in wages to a child under 18 are not subject to payroll taxes. So this means that both the employee and the employer share of payroll taxes are waived, and you just need to focus on the income tax. So that is all taken care of for you if the child is under 18. So then you can go ahead, hire them onto the payroll, and be able to pay them. Now, what should you do with the money they earn, right? So maybe you're in the car listening to this and your kid's like, yeah, let's do it. I want $12,000. Like, right? What teenager wouldn't want $1,000 a month, right? Knowing that this is going to help you. So what should you do with the money that they earn? A few of my favorite things to recommend to my clients are to put this into a checking or savings account in their name, depending on how old they are, of course. You have to, consider that in the strategy. But let's say they're, teenager years. What you want to do is put that into a savings account. Maybe that's for their spending money for college. Maybe that's for their room and board. Maybe you're going to put that into a 529 college savings plan for them. And here's the other thing, and I've seen this happen with clients and with friends. If you're hiring your kids, that's great, but you can also hire, and keep this in mind, you can hire someone else's kids. Now, you will not realize the benefit beyond getting an expense for hiring them, but this could be a really cool way to provide a gift to your family or close friends, because you could hire your niece or nephew. You could hire your neighbor's, son. you could hire your, whatever it may be, whether it's a relative or a close friend. You could hire the kids, and what you're doing is you're essentially pouring into their savings, their college savings, their, accounts. So you're basically giving them a gift in a sense, because they're actually going to be working. But what you're going to do is provide them the opportunity. And that's what I mean by a gift. Provide them the opportunity to be able to earn money from you by doing the work, and then also having that pour into their savings. So this could be a really cool strategy, by the way, besides the tax savings of it all, to really give back to your family, to pass on generational wealth, to do things like that, because that's really what it comes down to, and where the impact is going to happen is not just in you saving taxes, but in refocusing that money to causes, to impact, and to investing into the future that really really can make a difference. So if you're looking at what to do with the money they earn, talk to a financial planner, talk to your accountant, talk to your tax planner, because you want to make sure that you're in line with all of the goals that you have in place. These are just some ideas of what you could consider. And if you haven't thought of this before, it may inspire you to take action and actually look into this. So I hope that it does. Now, if you're ready to go implement this, what I recommend is that you start with planning. Make sure that this approach is acceptable for the age and skill set of your child, and that your state labor laws are all in alignment. You'll want to sit down and map out what will the child do, how much they'll get paid. You'll want to document a formal employment agreement between the child and the sole proprietorship or the LLC. So what you have to do is make sure that the employment agreement is in place that dictates what the kid's going to do, how much they're going to get paid, how they're going to get paid, because you want this documentation to stand up in the case of an audit, right? You want to make sure this is treated exactly the same as any other employee on your roster. Any other employee would be treated the same as your kid. So you want to make sure that you've got all of that documentation in place. And if you are an S Corp owner and you want to establish a contract with the family office, that is recommended. So you want to have a contract with the family office that pays the kid, so that it's clear that the S Corp is to pay the family office for what the kid is going to get paid. So you always want to have those agreements in place. So any transactions that are happening between different parties, you want to make sure it's backed up by a contract or a reason or something in writing saying, hey, this is what we're paying this party for. Always make sure you have that in place. Now, in order to do that, recommend getting in touch with a lawyer. We can give you some recommendations, but make sure that you've got all of that buttoned up. That's my little hint about legal for the day. And make sure that all of your relationships are documented really clearly, really, really clearly, so that you know who's paying whom and where the money's going. Open your child their own checking account in their name as well. This is important. Make sure the business pays into their checking account when the payroll is run, so it's not just dumping back into the business or back into mom and dad's checking account like it looks like an owner's draw. You want it to be clear that it's going to the child. So make it not look like a routine transaction of mom and dad pulling money out of the ATM, pulling money out of the business bank account. You want to make sure that it's going to a separate checking account designated for the kid, under their name. And again, great tool to teach the kid around, checking accounts, reconciling their bank statements, and all of the, financial skill set that we want to pass on to our kids. And you want to enroll in payroll services as well if you don't have that already. Our recommended provider is Gusto. We love using Gusto because it's so user-friendly. You can get set up in minutes and run payroll within a week with all the right guidance in place. So if you also create a time and work tracking system, whether that's a spreadsheet or you can actually do it in Gusto, you can document their hours, what was accomplished, and if you have any specific deliverables as part of their work, like a report, you can save that down as well in case it's ever needed for an audit. It really could be a simple spreadsheet if you wanted it to, just documenting all of these different elements, because what will happen is in the event of an audit, the IRS will come and ask, show me evidence of the child's work, what they did, how much they got paid, because what they'll do is try to see if you're paying a fair wage to them. And not that you would pay them less, you'd actually probably pay them more. You should not be paying your kid $1,000 a month to do an hour of filing, right? It has got to be commensurate with the amount of work performed, and then the documentation of that work has to stand up. So all of these different elements, right? How to hire your kid, what documentation you have to have in place. It might feel like a lot of work. It really might. It might be like, okay, Shannon, wait a minute. So I have to set up a whole nother entity. I have to pay my kid out of that. I got to set up payroll. I got to do this. I got to do this. I got to do this. Yeah. But, every year, if you do this, not set it up, you don't set it up once, but if you take advantage of the strategy every year, that's $12,000 of tax-free money every single year or more if they increase the standard deduction. So when you think about it, it really does make sense to do it when it comes to the financial side of things and the benefits. Not to mention the other ones I discussed today around giving back or educating your kids around money. These are all great side effects of doing it. So I encourage folks to explore this option and try to open your mind up past the point that a lot of us get to where we're saying, you know what, this feels weird. It feels like this is kind of cheating. This feels like I'm cutting a corner. This feels like a weird loophole. It feels a little sleazy, whatever. It's not. It's actually part of the rule book. So I always say this. This is just one of those rules that they baked into the rule book. And some of us learned the rule book, got a degree and took a long exam about the rules, right? And I'm telling you, this is one of the things in the rule book they allow you to do. So if you haven't taken advantage of this, ask yourself why. Because I think that a lot of us are held back from taking advantage of tax strategies because we think that they are too good to be true. We think that that can't be right, that can't be legal. Why? Because it actually benefits us. And the truth is, these are incentives. These are things built into the tax code. Because if you are a business owner, the IRS, the Congress, the executive branch, even everyone who is responsible for making this rule book, they want you to be a business owner. They want you to hire people. They want you to stimulate the economy, create commerce, right? That's all part of the incentive. And they give you these beautiful gifts of these different strategies you can take advantage of if you so choose in order to make sure that you're paying less taxes as a business owner. So that is how it works. I'm telling you that is legitimate, that you can absolutely do this, that many people are taking advantage of this, and you can do this for every single kid that you have. So just keep that in mind as another thing in your holster that you can pull out and you can be able to utilize this coming year and then years to come. So if you have any questions on this tax strategy or anything else we discuss on the podcast, please do join us in our podcast community. We have a Keep What You Earn community where you can interact with me and other guests, ask questions, and we even go live from time to time in that community. So make sure that you are also engaging there and catching up with me there. So if you have any questions, shoot me a note in there. And by the way, it's not a Facebook group. So just to mention that. So make sure that you're subscribing to the podcast. Make sure that you're in our community so that we can interact after the show. And I will see you next time. Thanks.
Hey, wouldn't it be cool if you could chat with me and our guests about this episode? Well, guess what? You can. Join the Keep What You Earn community now using the link below in the show notes. You can post your questions, chat with fellow business owners, and the best part, it's totally free. Oh, and by the way, it's not a Facebook group. That's right, no noisy notifications or distractions. Just what you need to get the full experience from listening to this podcast and maximizing your value. Meet us over there after the episode to get exclusive content and access to me and our guests for your questions. We'll see you over there. Thank you so much for listening. If you enjoy this podcast, please leave a rating or review wherever you listen. If you learned something new or felt inspired, please share your biggest takeaway with me on Instagram and tag me using the handle @ShannonK.Weinstein. Thank you so much for helping me spread the wealth and empower more business owners to keep what they earn. See you next time.